Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. All right, so new all-time highs on Friday. The high of the moment is 44.3325. We spent yesterday, basically trading up around the highs. It's just kind of consolidating underneath. They lifted it, up to the 32 area, then brought it back in, but it was pretty tame yesterday. There was a nice short off the open for us. We sat out a little bit, and then we got into a long, and really all we did with the long, 24 long, was just sit there and watch it. And it took a while for it to pay, but 3 hours later it paid. So that's pretty typical of the seasonality that we're in. I never really think that summer tapes are dead tapes. This is certainly not a dead tape. There have been some great big ranges, and you can see them right here on this chart. But when it does slow down, it's a tape where you have to be decisive and opportunistic. You really got to pick your spots, and you've got to pick your spots. Yesterday was basically a two trade day for us. We had the short, we had the long, and in between, when it's doing all that chop, there was a zone there between, you call it 18 or 19 and 23. Where it just wanted to chop around. There was volume weighted average price was in there. You had the hourly mid-band was in that area at the time. 5-minute mid-band. You had like 4 or 5 inflection points all jammed into about 3 handles. When it's doing that stuff, what we have found is the best thing you can do is just back away. Do nothing at all. You want to be long over the zone. You want to be short under the zone. If they can convert the zone to resistance or support. So in the case of yesterday, it gets up into the 24s, and it converts 23, can't get back down, can't get back down. It churned up there for a while, but it was a free look at it for us. The worst thing that was going to happen is we were going to get stopped out at 24, and then eventually, literally 3 hours later, it lifts. But that's, when a summer day wants to be slow, that's pretty typical. What you don't want to be doing, how you not want to trade those days, is long, short, long, short, long, short, okay, here, this is it. They're not going to send you a memo about when it's going to go. It could churn for 10 minutes, it could churn for 5 hours. But you need to do what we do in the room is we tell our subscribers, look, these are the prices that we don't want to be trading. This is what we want. This is what we don't want to be doing. And it takes the pressure off you as a trader. You don't feel like you need to be doing anything while it's churning, because that's a no trade zone for us. So we wait for it to convert, and we trade the conversion, which is a hell of a lot more efficient than, banging your head, on either side of a phone booth for 3 hours, waiting for something that doesn't feel like doing anything. You're going to burn commission, you're going to take paper cuts, and then when the real move does come, your brain is jello, and you're not going to participate. That is the reality of trading in churn and chop, and what that tape wanted to do yesterday. So hourly chart here, there was a little bit of a push down off the Asia Open yesterday, last night rather. It held the lower band here on the hourly, and they took it right back up, and it's just been kind of flatlining around daily pivot, and we're back to this same area. Since 3:30 in the morning, we've really been jammed in a 4-handle range between 23 and 27. So I'll be very interested to see what we get off the open. So just numbers wise, 5-minute mid-band 25.77, proprietary moving average 25.5, hourly mid-band 24.25, daily pivot 24, volume weighted average price 23.66. So again, 23.5 to 27, 27.5. That's your deal this morning off the open. Convert that price, and I think the advantage is to the bulls. Bulls convert that area, you'll take out the 33.25 today, and then the question is, what can they do with it after that? Do they run it to 44.50, or is it just another look up in this low to mid 30 area that's going to come back in? And if it does come back in, that could be an opportunity for a short. But what we've seen is these little push downs from the bears that don't result in much. It just ends up being another dip buy. You can trade them, but you better take your profits where you find them. And when price stalls out, take the rest of it. And once it starts heading higher, making some higher lows, get on the other side of it. And you just kind of draw a line underneath and you say, okay, unless you can convert that line underneath, I'm along. That's what's been working. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come join the room. Come learn how to do these things. Come learn how to trade in that kind of chop. Learn how to deal with these zones. You'll be more efficient and more profitable. All right. All the best. See you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.